Alright, so let's begin the show, and today we'll be focusing on having the right kind of insurance or the right kind of life insurance, which is the term insurance. So a lot of time people don't realize the importance of having a term plan, even if they do, a lot of them buy it very later in their age. So what are the repercussions of buying a term plan at a later stage? Are you even eligible to buy a life insurance plan in the form of a term plan post 45 or post 50? And also, since there are a lot of options these days, a lot of variety, feature packed term plans available, which is the right one for you? Should you be going for a plain vanilla term plan, or you should be buying something which is very feature packed but also comes at a higher rate of premium? What is a common mistake that usually people do when looking for a term plan? What should be the criteria when you are trying to select the right term plan for you? So a lot of questions around selecting the right kind of life insurance policy as a term plan. I have with me Dinesh Dilip Bhoi, Assistant Vice President, Life Insurance Cross Products, Anand Rathi Insurance. Hi Dilip, good evening, and hi Dinesh, good evening and welcome to the show. So, one good thing is that over a period of time, people have really realized the importance of having the right kind of insurance policy. And since we all know that traditional life insurance products that they used to have never gave them the right kind of protection, because when we talk about financial planning, having the right kind of insurance cover is the first step to, in terms of your risk coverage and liability coverage. Term plan definitely is the right choice for you, but as a concept, or as Indians, we are still somewhere stuck in our heads as to having an amount, something after the death. Maybe there is something as a backup that we still want to have once a person dies or once a breadwinner dies.
Good evening, Kavita. First of all, thank you very much for having me on your show. Like you said, the first thing that a person should have, they should have a term plan, a pure term plan. Now, there is this age criteria, which is anywhere between 18 to 65. Anybody can buy term plan. But the right age, what I personally feel the right age to buy a term plan would be once the person starts earning money. All right. The moment he starts earning money, he should invest in a term plan. The reason being, at that time, the person is young and it is achievable. He should buy the term plan. As he delays or as he tries to take the term plan at a certain different age, the premiums keep on increasing. The premiums get higher. There are chances of some sickness coming up or some disease coming up in future, which might hamper the person to take a life plan, or which might increase. There would be a loading on his premiums. With the premiums would get higher and higher and drill a hole in his pocket.
Dinesh, at what age, when you buy a term plan, it's considered to be late in this entire process of getting a coverage of life insurance? When is it considered a delayed strategy as far as a life insurance product purchase is concerned?
Unfortunately, in the mindset, everybody is, you need to buy a term plan only after you are married or after you have children. That is what the people think of. But as I told you earlier, the sooner you buy the term plan, the better it is, because you're locking the lowest premiums for the entire tenure. But considering the fact that people buy term plan only after they are 35 or 40s, when there are diseases coming up and the premiums going higher and higher, diseases like overweight or diabetes, hypertension, these are all diseases, lifestyle diseases, which come up during at that age, and then it becomes difficult to buy life insurance. So, as I said earlier, the moment the person starts earning, he should invest in a term plan.
Dinesh, it's a great idea to have a term plan at a very earlier age, but then the cover that you choose at that age might not be the right 20 years down the line. You might see changes in your life stages as well. You might have financial responsibilities on you, and that's a time when you might just realize the cover is not apt for you or it's not enough for you. At that time, the first time policy you bought was at 20, maybe the next coverage that you want to have is at 40. Now, the one that you're buying at 40 is going to come at a very high premium rate.
Right, absolutely right. So here in our country, people buy insurance for first of all, they buy short-term insurance. if a person at 25 buys insurance, he will buy for a policy term of only 20 years, whereas he can go up to 40 or 60 years, but just for the risk of paying a higher premium, he would reduce it to 20 years. Now, once he overcomes that tenure of 20 years and he's 45, then he has to buy life insurance again, and then obviously the premiums definitely go much more higher. And to tell you, there are a number of changes which have happened in term insurance plans now, which people are not aware. And then at that
So,
moment, it would be very
right.
difficult to buy
So,
term insurance.
so what we've also noticed, Dinesh, is that people buy the life insurance or a term insurance product for say 50 years. Okay, if someone is
Right.
buying it at 20, they might want to have it for 50, but then 20 they're just buying a coverage of 1 crore,
Yes.
which might not be enough at the age of 40. So when you increase your coverage amount, your premium also increases, right? By what percentage then?
Well, that depends on your age and what kind of premium you are looking after. Now, as you said, that the premium increases, obviously the sum assured also would increase. But had it been taken earlier, it would have been better. But the person doesn't understand. So at that age, if he goes to buy, the premium increases by more than 25 to 30%.
All right. What are the things in mind that one should be, counting on, or the criteria for selecting the right kind of term plan for themselves?
See, first of all, the term should be very important. The kind of term plans now have changed. Now, earlier there was only if you die, you would get money. That was the basic concept of a term plan. Only if you die, you would get money. Now, the term plan concept has changed. All the insurance companies have come up with this, that in case if you outlive your policy term, you can get the premiums back. That is, it is called return of premium option, where your entire premium, whatever you've paid, you would get it back, excluding the GST. So this concept of term plan has changed. Now there is another concept also which has come in, which is a term plan which invests in equity market. So it becomes a term plan as well as an investment plan. The premium is a bit higher, but at the end of the maturity term, it gives you good amount of money that you had invested, and it doesn't go free, or you don't feel it's gone back to zero.
All right. A few things that one really needs to understand about, when buying a term insurance is that there are a lot of feature-packed term insurance also available. Should you be going for a plain vanilla product, or can you experiment?
I would definitely say experiment, because a plain vanilla product is very cheap, but there are a number of riders that can be taken along with the term plan. These riders cost a little bit more, but they give you much more security, much more higher safety, and a great peace of mind. So these riders should definitely be taken, and it should be experimented while taking a term plan.
Uh, I would also like to understand the scenarios where the term plan increases for a person, and also what could be a basic rate of premiums.
Well, for that, I can give you a statistics for a person who's around 18 and he goes to buy a term plan. The average premium which comes at that moment would be around 5,000 to 6,000 rupees for a 50 lakh sum assured. The moment he's 30, the same premium increases to around 9,000, and at age of 45, the premium would go around 18 to 20,000 rupees for a cover of 50 lakhs and up to a cover till age 65. This is
What
the
exactly
average
do you mean?
premium.
What exactly do you mean by a claim settlement ratio, and how should one be looking at that?
I'm sorry, I didn't get your question.
What exactly do we mean by a claim settlement ratio when considering a term insurance policy?
Wow, that is the most important thing I feel that we should consider. The claim settlement ratio is how many claims has been settled by the company, where the claims have come into the company. So while buying a term plan, you should actually see who is the highest or who is the best claim settlement. Now, in today's market at the moment, HDFC and Max are doing very well with 95.5% claim settlement, which is the highest. And there are other companies which are following on 99%. But even then, you should go for the best. So you should see that in case, God forbid, something goes wrong, your claim should not be rejected and your family should get the due.
Right. Thank you so much, Dinesh, for being on the show and helping our viewers with everything related to term insurance today. On that note, let's
Thank
take
you,
a quick
Kavita.
break. But
Thank
then
you.
post.
If you like this video, then like, share and subscribe to ET Now.